Yeah, I'm David Lotan, Chairman of Aurion Resources. Aurion is a greenfields gold exploration company in Finland. We've got several emerging and we think significant discoveries. We have investments from or partnerships with three major producers. We're located immediately adjacent to Rupert's very exciting 4 million ounce Ikkari discovery. We're tens of kilometers away from Agnico-Eagle's Kittilä mine, the largest gold mine in Europe. We're about 12 kilometers west of Anglo American's very exciting Sakatti nickel copper PGE discovery. All of this we think makes Lapland one of the most exciting emerging mineral belts in the world, and we control about 1,000 square kilometers of it.
Brilliant. Dave, good to see you. Thanks for coming on the show. It's been a while since your company's been on. I think I spoke previously with Mark Santarosa, I should say, back in August 2020. So I'm kind of keen to get a catch up, see what's going on. Obviously, you've had a sort of resurgence recently from sort of November. But I want to start off with you. You're chairman. What's your story? Why are you involved with this?
Sure. Well, I bailed the company out in 2015. It was going bankrupt. It was run by a good friend of mine. He'd been a consulting geologist with me on a bunch of things that I do in the natural resource world. And I thought he'd done some very good work and deserved to take it a little bit further. So when the company was unable to get to capital markets and fund its operations, I sole funded the company for about 18 months. Later, I joined the board to help the company get re-intermediated to capital markets. The company made a big discovery, or what we thought was a big discovery, and had to make a decision to remain a prospect generator or to keep control of the discovery and finance it out of capital that we raised. So I collaborated with the board and management in making that pivot decision, as we would call it. And then later arranged the strategic investment from Kinross. I guess I became chairman around that time, and I've been a volunteer chairman ever since. I don't take stock options. I don't take any compensation from the company. And all that's meant to ensure that shareholders understand that we're running it, as I like to say, to make the stock go up.
Okay, and what's your background before that? Yeah, obviously, the bailing out bit's interesting, but where's the money come from?
I was a consultant in structured finance and what we used to call exotic derivatives. I got hired by a hedge fund out of the consulting world to take over a distressed company that they had an investment in. We fixed that and sold that. I started another company in partnership with them in 2004. I sold that to one of the big banks in Canada in 2007. And with a brief stop at a pension fund for a year to help them build a similar business, and then retired and basically I just run my own dough. So I guess I'm what they call a strategic investor in natural resources. I take anywhere from 2 to 9% stakes in Canadian small caps. Sometimes I go over 10%. I think I've done that 3 times now. Sometimes I take a board seat, usually when management needs and wants some assistance in finance and strategic planning. And so Aurion is one of the boards that I'm on, and that's how I got here.
Okay, and so how are you describing it now? It was a prospect generator. How would you describe the company now?
Yeah, sure. So when Mike started the company in 2008, his comfort level was prospect generation. So that's a strategy where it's a capital light strategy, and it has 2 primary attributes and two primary assets. It's a capital rationing strategy. You do very inexpensive work to attempt to identify prospective mineral occurrences. And then you go and do a partnership with a mid-tier or a major where they do the expensive work and you are carried for some portion of value going forward. And the other attribute of these prospect generators is if they find something that is in their estimation potentially going to be financeable on their own, they can pivot to sole risk exploration. So that's happened a few times. Famously, Arequipa was a prospect generator. Perina was so good that they pivoted to sole risk exploration. Mirasol years ago was a penny stock, went to $7 on their own discovery. Almaden went from a penny stock to $3 or $4 on the Ixtaka discovery. Probably the most famous in Canadian history is Virginia Gold, where Andre Gaumont, I think, did 75 joint ventures before he discovered Eleanor. They took it forward on their own and sold the company for around $1 billion and spun off a royalty that produced, I think, another 500 million a few years later. And so that's where Aurion got to. We thought that opportunity was there, and we made the decision and then spent all of our time thinking about how to finance it and how to do it in the most responsible, I'll say, risk-adjusted manner.
Okay, so you're the money, okay, and you put $2.5 million of your own money in last year. 2 million of it at market. Okay, so you're serious about this. But what I want to get out of today's conversation is to understand whether you're just drinking the Kool-Aid and you believe the story and you're putting money in because you can, or there's a clear plan to value creation and possibly even an exit for you guys. So I've got to believe that you've got the team, the asset, and the ambition. So should we start with the team? Because if your money, who's helping the company or helping you do the technical analysis and move this thing forward?
Sure. Well, as we discussed off camera, our founder, Mike Basha, who was by my estimation, one of the best prospecting geologists in the history of Canada, identified the opportunity and staked the ground and put the play together. And unfortunately, was victim to a horrible tragedy in 2019 when he lost his son. He did stay with the company for another year, but in the interim, one of our board members, Matti Talika, became available to be our CEO. And Matti has drilled tens of thousands of meters for gold in Lapland. He's a Finnish native. He was with Dragon Mining when we bought our first small portion of land in Finland. He staked the ground that B2 has made their discovery on now, or the discovery in partnership with us. He's a superb exploration geologist. And not just from the standpoint of a concept generator or someone with an idea of where to look, but he's really, really fantastic at executing drill programs and doing it cost efficiently and in a manner that gives a junior the best chance to generate the most amount of data for the least amount of money.
Okay, and who else is on the team?
Well, we've got a local contractor, Geopool, run by Mathias Force, and really just a couple of other staff. It's a very capital light, staff light business where we add pieces as we require. Of course, we got a partnership with B2. So on that particular ground, they're the operator, and we get all of their expertise and capital. But we don't have a lot of people.
Okay, which is fine. Outsource is a great model. Don't mind that at all. It can be very efficient as well, which I like. So how? I don't necessarily want to talk about the assets yet, but I'm saying, how are you financing these guys? I know you put a lot of money in yourself, right? And that's a very low G&A. It's great. And you're not paying yourself. That's great. But how much money are you allocating to do what, with what outcome? What's the plan?
Well, I would say that we have raised from the Canadian capital markets probably about $50 million over the years. As I mentioned, the company couldn't raise money in 2015. So I sold finance it that year very compassionately with debt that did not convert to cheap equity, didn't draw any equity or warrants or anything like that. I re-networked the stock. Got a bunch of people who I have worked with over the years in Canada interested. They came into it. We got 3 of the big funds to finance the company in 2016 at 40 cents a share without a warrant, which was very difficult at the time. Made the discovery. Raised money at $1.50 from Ross Beatty and John Tognetti and Kevin McLean at Century, who you just had on as the CIO of Star Royalty. We didn't blow that money on drilling, and instead we ran a politely competitive process with a bunch of majors. Kinross then put $16 million in at $2.30 a share. Gold Corp was part of that process. They bought 5% of the company in the market at $2.80 a share. Maybe about 2 years later, Eric Sprott came in at $1.50. So we're financing it opportunistically. and being as careful as we can who we put on the register, and trying to run a balance sheet that allows us to run programs, get good results, add capital if capital is available at good prices, or stay out of markets if it's not.
So you name some pretty big share price numbers in there. So it's fair to say the last 5 years have been fairly erratic for you. And as a prospect generator,
Correct.
it can be quite hit and miss. I'll be nice to you and say you pretty much moved sideways for the last 4 or 5 years. And that's a tough one, right? Because perception in the market is, there's an old story, it's not going anywhere, I'm going to look at the next shiny new object, right? Sure. You've come in, you're confident, you put $2.5 million of your own money, I'll say it again, last year. So the plan is...
That's Matt, that's only last year, Matt.
Right. I mean, how much have you put in total?
Put multiples of probably 6.
Okay, right. So you're keen, right? What we got to work out is a bit of smart, because you need to be able to say to the market, look, what is it that you feel you need to say to the market? I don't want to put words in your mouth.
Yeah, sure. Okay. Well, so I'm not the only investor in the company. Our CFO, Mark Surdan, was a Lipper Award-winning gold fund manager at BMO Asset. He joined the company after BMO converted those funds to ETFs. But between Mark and I, and Mark Santa Rosa, who's also still with the company, we've, I'm sure, looked at 2,000 exploration companies over the years. I've personally invested in at least 300 or 400 of them. I have investments in 75 other natural resource companies right now. And we spend a lot of time examining ideal pathways to value creation. A lot of time. And so what we have observed over time is that a good orogenic discovery, and we're in orogenic territory here, and those are deep-rooted gold systems. They're complicated, but they have high grades and they can go on for many years. What we've observed over time is that on average, in decent cycles, well-run orogenic discoveries can yield about a $500 million takeout on average. And the spend is anywhere from $20 to $50 million to get those outcomes on average. And I reference Queenston Mining, Rupert Resources, Virginia Gold, Comaplex, Cumberland Resources, and many, many others. These are just a few of the data points which would be commonly known to Canadian investors and perhaps viewers of this channel. So we try to manage the company to that outcome. The property has an unbelievable surface expression of gold, unlike anything any of us have seen in our careers. We have hit it in the ground, but what we are assuming is that if we do this right, and if the property has the potential that we believe it has, we need to make sure that $500 million is going to yield a share price which is attractive to incoming investors. And that's why we work maniacally on controlling dilution and on controlling who's in the register. And we're 118 million shares out today, so that would still be quite a payoff. And I would also say that as we watch the market, the numerator is going up. Kinross just bought Great Bear for $1.8 billion. Newcrest just bought Pretium for $3.5 billion. Fortuna bought Rox Gold for $1.1 billion. Northern Star just put a $1.5 billion valuation on Osisko. So I think that from our perspective, the size of the prize, the price of a prize of this size is increasing. And we just need to finance it responsibly en route.
You do, and en route's the key phrase there, because you're a long ways from where those guys are, and I want to get more kind of grounded with how you go from where you are today to where you feel you can exit. Now there are lots of exit points in your mind, and I kind of don't want to do peer analysis, because we get a lot of CEOs come on and they compare themselves to X, Y, and Z, and they're nothing like it.
They do.
I think we've had a kind of honest conversation here. I want to continue along that vein of right. So as I said, you're moving sideways for the last 5 years. There's a perception in the marketplace about what you are and what you're not. Right. You believe in it. enough to put a lot of your own money and capital into this. So how do you take the position today? Because you've mentioned something there, okay? B2, for instance. So B2, are you continuing to work with them at the moment? Because someone sent a question in saying, well, why has B2 opted out of the incremental earn-in option, for instance? So is B2 a solid partnership?
Oh, it's a fantastic partnership. So B2 has been working with Aurion now for since 2015. And they had spent their $15 million to earn 70% of the Kittilä-Ikkari corridor. And mercifully, and very late in the game, and thanks to the Rupert discovery, they were able to move the drills to a part of the property which has yielded a new discovery. Now, if they were to go from 70 to 75%, as they could have under the option agreement, they would have had to produce a bankable feasibility study and arrange our share of the project debt. So we would estimate that would be a plus $50 million spend to earn just an extra 5%, which would mean that after just a few drill holes, they would be putting a plus $1 billion valuation on that property. So it wasn't surprising to us when they said, we'll stick at 70 and challenge you, Aurion, to contribute. And we kept a very healthy balance sheet. And then we're able to raise some money on the strength of that discovery. So with $25 million in the bank, we were grateful for the opportunity. And here's the second reason why we're grateful for the opportunity. So James, as you know, has just made a fantastic discovery.
Hey, James,
which in places,
we're talking about Rupert.
Sorry,
yeah.
Rupert Resources has just made a fantastic discovery, which emerged in only 18 months' time as 4 million ounces in only about 36,000 meters of drilling, maybe 40,000 if you want to include some of the drilling leading up to the discovery. So it's one of the lowest discovery costs per ounce we've seen in many, many years. It's a beautiful, flat, continuous ore body. It probably comes a little too close to our property line for James' liking, but that works for us. And so if it does extend, and evidence that B2 generated in the last couple of months indicates that it would extend or that there will be more occurrences like it on the other side of the border, well, that's been one of the highest return on capital discoveries we have seen in many years. Let's say $15 million spent for a durable increase in market cap of $900 million. It's a $1 billion company today, if you include the Agnico warrants. That's a fantastic return on equity. And one of the reasons that we haven't stopped looking for new mineral occurrences after our Omrisco discovery on our Solon ground is because we felt there might be something better. And it just so happened that James discovered something better immediately adjacent to our properties. We still think there's plenty of room for more. So, is Risti my white whale and am I Ahab? I don't think so.
But you're basing a lot of hope on what Rupert's done at Ikkari because you're next door. This isn't a closeology thing. This is B2 have done enough work to give both of you confidence that potentially there's some upside for you. But what's the game there? Because is there going to be enough for B2 to say, hey, we've got potential for? They're big boys, right? They want to get into mines. They're not going to mine the market. They're not there for exploration development play. It's correct. Can they build a mine? When do they get to the point of understanding that? Because the upside, if they do, it's good for you guys, right? But
so we don't know for sure, but our expectation is that they'll present us with a give or take $10 million Canadian budget for next year.
Right. And
we'll take $3 million of our $25 million at year end and contribute it gratefully to that. And given that James just spent $15 million at the most to delineate 4 million ounces, if there's a similar mineral occurrence as it appears there might be, then that $10 million could go a very, very long way to building value. And we'll own 30% of that. So we're a $140 million company today. It would be fair to say that the potential for that joint venture to backstop all of that valuation is plausible. Now we have our own discovery on ground we own 100% of at Omrisco. And that's gone out of the news for the past.
Yeah, let me talk about that in a minute, okay? Because I want to be clear. I want people to be able to do some basic analysis on how they go about valuing you. So with the kind of the Ikkari, does it continue along strike? Does what sort of scale, etc. $10 million, and you're going to allocate $3 million or whatever the actual precise numbers end up being. There is how much drilling, how many meters does that get you? What do you do next? What's the timeline in that? Because at some point you got to say, B2 have got to say, and you've got to agree with them that we continue to drill this thing out because we can prove up. I don't know what it is that you think you can prove up based on what you see next door or adjacent to you with Rupert's Ikkari project. So tell me how that plays out.
Well, given the evidence that Rupert's already provided, I would say that $10 million will demonstrate whether or not there is another Ikkari across the border. And whether we even need to take it to the point of a resource is an open question. And I have stated to our investors over the years that I'm very much against small exploration companies going to resource too quickly. 9 out of 10 times it doesn't work. Chris Taylor at Great Bear resisted the pressure, kept going, kept putting his drill results out on the website. People could do their own resource, and the company sold pre-resource. James, on the other hand, had something that was so continuous, so unusually continuous, that he was able to create a resource in only 36,000 meters of drilling. Whereas Chris, on the other hand, was probably close to 200,000 meters by the time they sold Great Bear. And many of these Abitibi gold stories, or many of these Canadian greenstone gold stories, advertise that they're going to be drilling 100,000 or 200,000 meters next year. And that's just not the way we think juniors make money for their shareholders. James took a long time doing base of till samples and mapping and geophysics, testing mineral occurrences with just a few drill holes until he got to something truly spectacular. And that's our blueprint. That's our blueprint on our 100% owned properties. And that's probably going to be the combined blueprint on our partnership with B2. Probably don't have to go too far to get convinced that there's a lot of economic value there, and to convince the market there's a lot of economic value there because of what's already been found.
Right. And so B2 are happy to use the Rupert blueprint. That's what you're saying. That's agreed.
Well, it was the crucial evidence, and this is how new gold camps emerge. I mean, we made the first new discovery in the area in 2017. It was this massive boulder discovery. Took us 42 drill holes to hit it. The discovery hole was 3 meters of 800 grams. We have lots and lots of high-grade drill holes at Omrisco, but it was really tricky to drill. It's in the middle of this rubbly hill. We had to use helicopters. I laughed when I went back and looked at some of your old interviews with Chris Taylor and talked about these slides where he had a jihadist with a machine gun, a glacier, a lake, and a helicopter on a slide. And his pitch was, Great Bear has none of these. And I will say we had none of them either, except for the helicopter. And so the Omrisco discovery looked so much like the Dixie Hinge Zone that Chris first discovered, but it wasn't on flat ground. It was really difficult to move the drill around, really expensive. And although we were willing to tolerate some waste in those early programs after discovery, we just didn't feel like the company could continue to spend that kind of money. And so we took our time. We put an end to those programs. Matty came in and he solved the problem. No more helicopters required at Omrisco. And now that discovery can begin to evolve at a cost and at a level of efficiency, which is on market.
Okay. So you got a chunk of change in the bank at the moment, which is good news. It kind of gives you a little bit more control in terms of decision making about how to move this thing forward. Because I say going from prospect generator through to explorer developer, it's a different skill set. It's a different business model, clearly.
Indeed.
And when I go back to the kind of financial pressures or the share price pressures, and maybe I don't know what kind of feedback you get from shareholders about the speed at which this is moving or the direction in which this is moving, is you've got to say, hey, look, we've got a JV there, world-class JV partner there, that we are going to spend $10 million next year. That could release a lot of value or create a lot of value for the company. Why?
Mm-hmm.
And then you've got your own 100% owned assets and targets that you want to explore yourself. Why don't you try and bring in other JV partners? Isn't that a much easier model for you, given you kind of got a very light staffing situation? Would that be more appealing to you?
No, the JV model is a legacy of how we used to do business, and it was appropriate for a company that was a penny stock and was raising capital at 25 and 40 cents. When we made the Boulder discovery, the stock went to $2. And you're going to have your own rules, but Mike and I agreed that if we could raise the money that was required to answer the important questions and give away 10% or less of the company to do it, then the market was paying us to go after the exploration on our own. So the Boulder discovery took the stock to $2. We raised money at $1.50 from Ross, Eric, some of the great luminaries of the business. Then we raised money at $2.30 from Kinross. And the capital markets were giving us capital at an appropriate cost to go after this on our own.
So where's the discount coming from then, Dave? Because you're talking about $2 there, you named it a couple of times. You're down at 123 today, right? Either exactly. It's not working, the idea is not working, or the market's not giving you credit. And I appreciate precious metals came off in the last quarter, big time, and maybe you could blame that a little bit. But the reality is the share price has kind of slowly come off. What do you think you need to do to change that, or is that just reliant on whatever happens in the market?
I think that the problem with most discovery stories, and we would not be the only discovery story that was frothy and had an excellent share price early on, and I think that the prospect that the market, let me rephrase that. The discovery that we made on surface was so extraordinary that retail shareholders and even Kinross and Gold Corp and some of the other companies that came to the property, it was so spectacular that I think we all thought it may be one of the easier discoveries to ever develop in drilling. The giant quartz fragments that we found on surface, and thousands of them, seemed like they must be right on top of something economically significant. And our first drilling campaign, unfortunately, confirmed that they were not. That the economically significant portions were going to be somewhere adjacent. Our second drill program found the first economic occurrence. And we made 2 discoveries at Omrisco, very high grade, coming to surface, but it was slow going, helicopter drilling. And unfortunately, after our second discovery, Mike lost his son. That was in November of 2019. And then we were hit with COVID. So we spent a year wildcatting on very low odds, but potentially very high payoff satellite occurrences. And we didn't hit. And we ended up playing defense for the better part of 2 years. And I had to put millions more dollars into the company. But along the way, gold price went up. Discoveries were made on adjacent properties. M&A has heated up in the sector, and the price of these prospects has gone higher. It's an old story in some people's minds because it started in 2017. But what really marks the age of a junior is the number of shares outstanding and the number of dollars in the treasury.
True, it does. And it's tight. I like it. But I come back to your phrase you use, wildcatting. I want to know, has your approach changed, or is it going to change? Because wildcatting can be a recipe for disaster, right? Is there a kind of more systematic approach in terms of the way that you're coming about this one? Otherwise, you're going to have to keep throwing money into this thing. So you talked about cookie cutter with the B2 JV, using the Rupert model. Great. The stuff that you're in control of with your money that you raised a chunk of change recently in November, just shy of 17 million Canadian. How do you go about being a little bit more rigorous and systematic with the application of that? What'd you say?
Yeah. Well, so wildcatting is a term I like to use because I think that it immediately tells the listener something about the risk, the return, and the odds on the target. All of the targets that we investigated during 2020 were semi-mature targets. They were outcropping gold on surface. Like Omrisco, they were in these chemically inert clastic sediments, which normally didn't host gold. Omrisco turned out in drilling to be a significant gold occurrence. It was inefficient to drill and costly to drill, so we had to take it offline during the pandemic, and it generated no news. All of the other targets looked like Omrisco, but they weren't Omrisco. So they weren't pure wildcats, but they were low odds targets. They were low cost, and they potentially had a very high payoff. But I don't want to deceive our listeners. There was definitely risk in those targets, and we didn't get lucky. And as I said, we had to play a lot of defense on the balance sheet, and I had to put millions more dollars into the company. But understanding that $500 million payoff for a property of this kind, assuming that it develops as a surface suggests it will, understanding that payoff is still out there, and understanding where we are from a share perspective right now, I'm convinced there's still plenty of upside.
Yeah, and great, but I want to answer the question specifically, because it says to existing shareholders and people, new investors looking at this, is like, okay, I get the potential replication, or you'd like to think replication of what Rupert had done on the other side of the fence, as it were. Great. Put that to one side. That in itself would be that you'd be done and dusted then, right? But with the way that you're going to go about and spend the money which you've raised recently from Kinross and presumably others along the way, is you say weren't completely wildcat. They were known targets, but they were higher risk, but potentially higher payoff. But are you going to move forward like that with the rest of the capital available to you? Or are you going to have a slightly more conservative approach and a bit more of a systematic approach? That's what I'm trying to get at, because otherwise it's like, hey, you may get lucky, but I may get lucky by, buying a lottery ticket, right? And that's that's my decision, but I want to know how you intend to spend the money, and that will inform if I want to invest in you guys.
Understood completely. All right. So, we think the size of the prize on our joint venture ground with B2 is possibly as large as Rupert, possibly larger. That's $1 billion today. 30% of that, therefore, is worth $300 million. We think that the size of the prize at Omrisco is a conventional orogenic discovery, which, if it develops and is handled intelligently, is worth $500 million. We own 100% of that. It may not be that big. We're not sure. But we had to take a year off from it in order to figure out how to develop it, how to bring it forward at a cost that is in line with the industry. We were drilling for probably $700 a meter with the helicopters. Now it's down to $250, given the improvements made in the program. That's a discovery. The odds of having success at Omrisco go from 10%, which might have been the odds of these other targets, up to, let's say, 80%, because we've already made discoveries there. We just need to make it larger. And the last, and I would say most prospective, but still lower odds aspect of the program is we're running the base till programs that Rupert ran for many years in the covered areas of our property, where in the rocks that are Ikkari-like, looking for those kinds of gold occurrences. So there's 3 programs going on at the moment. There's our joint venture program with B2 on an asset that's developing value potentially very quickly. There's our existing discovery at Omrisco, which took the company to $200 million all on its own in 2017, and which we're finally getting back to at an appropriate level of cost. And then there's our generative programs all around the property in rocks, which, thanks to Rupert's discovery, we now know are very prospective, and we're using the same techniques that Rupert used to make those discoveries. Okay,
and so just so I'm clear, B2 are operating. You're not operating for them, are you? They're doing that. You just throw the money in, right?
B2 is the operator.
Got it. Okay, cool. And so therefore, in terms of I know you outsource it, but Ian, in terms of where you're applying your drill capital this year, it's very much Omrisco. So that's number one priority. and then the kind of more exploratory stuff
Correct.
takes a second. Right. Okay. Understood. Mm-hmm. Okay. Look, I think just in terms of time, just to make sure people can digest all of this, that's a good start to a conversation. It might be interesting to kind of do a more technical interview with maybe one of our analysts on the geotechnical side of things. Anyway, if you come back on, that'd be really cool. I'd like you to, because I think it's quite an interesting story, actually. In Finland, I think people are starting to understand it better. Obviously, thanks to people like Rupert and others, and some of the big boys who already operate in country. So, Dave, I want to say I appreciate your time today. Enjoyed listening to that. It's really intriguing about how this moves forward, and what this year brings for you guys. So, stay in touch, and perhaps we'll get you back on soon, right?
Great. Thanks so much, Matt. Really appreciate the work you do.